Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-specific queries on the program. In case you're here for the first time, the WhatsApp number is flashing on your screens. Send me your questions here along with your name, location and your contact details. We can also give you an opportunity to speak directly to our top guests and take a custom-made advice. Now, you can also log on to our YouTube channel, that's Business Today, and send me your queries on the Daily Calls live on the comment section. I'll be happy to address all of those as well. Of course, we'll be joined by two market experts to guide you through, but let me quickly first look at how the market temperament is currently. 25 points lower on the Nifty, 25,436. We started on the back foot and we've stayed, choppy throughout the first half of the, trading session as well. While the Nifty is slightly lower, you also have the Nifty Bank that's also trading slightly low in trade. IT metals have slipped, broader markets have slipped as well. Autos and realty are also, coming under some pressure. So the markets is turning defensive. You can see 1.5% rally on FMCG stocks today. Some more uptick on oil and gas, boosted by the crude oil prices that are ebbing lower. PSU banks and infra, those are some of the other pockets that are still holding up in trade right here. Of course, when we look at the top gainers, HUL is the top mover today, 2409, 3% uptick. Tata Consumer Products, Eicher Motors, Jio Financial Services, these are the top moves as far as the Nifty is concerned. Largely, all the stocks have slipped. So you can see Eternal, that's down by about 2%. Tech Mahindra, Ultratech Cement, BEL, Hindalco, these are the pockets that are slipping in trade right now. But let's welcome our guest on board. We have Nilesh Jain, Head and Vice President of Technicals and Derivatives Research at Centrum Broking, joining in. Hi Nilesh, warm welcome. Good afternoon to you. Help us understand your fresh view on the markets. We are inching closer to two big triggers. The tariff deadline of July 9, we still do not have any kind of a deal yet. That's the biggest worry that Indian investors right now are dealing with. Secondly, it will be the earnings season that will kickstart as well. So this week could point out to more volatility, more uncertainty getting into the focus. How would you look at trading the markets then?
Very good afternoon, Sakshi. Absolutely. So ahead of multiple events, as we can see, the market is as of now consolidating in a very tight range. We can expect a big move going forward from here because even if you look at the implied volatility of the premiums, which has gone up and which has in fact shot up today. So looking at the premiums now, which are trading in extremely high levels, so that basically indicates that going forward, we are likely to witness a big move. The direction is still not confirmed because the markets are trading in a very tight range. 25,300, 25,600, that's the 300-point tight range. Whichever side it will break, we can expect a follow-up in that particular direction. But looking at the overall setup, we are expecting market to consolidate in this range going forward. Bank Nifty, on the other hand, in fact, witnessing some bit of selling pressure. It is not been able to sustain above 57,000. So that's the important level to watch out for. It is important for the Bank Nifty to cross 57,000 level decisively. Then probably we can expect a short covering move towards 57,500 to 57,800. But as of now, in this kind of consolidative market, we are focusing on sectors and stocks as of now, where we are getting a good attraction. And even if you see the volatility index India VIX, which is very much in the comfort zone at 12.5, so that basically is indicating that we may not see any major crack on immediate basis, but yes, some bit of a consolidation is likely to continue.
Okay. Nilesh, we already have so many of our queries coming in for you. So we'll start off by taking the Q&As now and we'll come to you for your stock-specific choices as well in the interim. Let's take Jaya's question first. Jaya Rami Reddy Guram says, good afternoon. Thank you so much for this show. I really benefit from this. Thanks a lot, Jaya, for writing in. She says, I want to buy Ayush Wellness and I want to know whether it's going on upper circuits. Will there be an opportunity for me to enter into this stock and whether this stock is good one to really look at? Okay, let's pull up the stock of Ayush Wellness and see how the stock is placed at this point in time. And of course, we will also track for the technicals with Nilesh also here. Today 2% higher, but yes, you're right. In the last 5 days, the stock has moved up 8%. It's been moving circuit to circuit. Past 1 month, a 48% rally. Past 6 months, a 98% of a rally has been seen. So from April, about 55 odd levels, the stock has already rallied about to 223 now. Should there be some caution now, Nilesh, on a stock which has already rallied about 80-90% in the last year to date basis, especially starting from April of this last year to now, this year to now? How would you look at this stock?
Well, Sakshi, first of all, if possible, then first of all, it's a BSE stock, BSE listed stock only. And if possible, kindly pull up last 2 year chart because if you see in this kind of stock, people get stuck and they get stuck very badly. As you can see, in last 1 year, we have seen a constant upper circuit followed by 2 to 3 months of lower circuit, and there has been multiple lower circuits in between. Now, from past almost 3 4 months, the stock is hitting an upper circuits. So, in this kind of stocks, there are high possibility that at some point of time the stock will start hitting lower circuits. It seems like operator-driven stock not advisable at all to chase these kind of scripts because the probability of getting stocks are very high. And so avoid tracking such stocks where the stock is constantly hitting upper circuits and lower circuits as well in between. You have better options available, better liquid stocks available where stability is there, and look at the fundamentals as well. Apart from the technically, as you can see, the stock is constantly moving higher, but it is constantly hitting upper circuits as well. So do not chase. Strict caution is advised in such kind of stock. Better avoid.
Okay, better avoid this one. That's the view that's coming in because remember, just like how Nilesh has pointed out, this stock used to trade at just 1 or 2 rupee odd levels back in the year December 2023, and the way it's moved up is erratic and has not been substantiated with a lot of fundamentals as well. So stay away from such stocks. One can get trapped in such stocks as well. Let's quickly look at taking the next one. This is one of our viewers, Sandeep Pancharya. He says, I want to know, sir, on Vedanta, what is the best entry level? And in case for the short term, I need to play this one, what is the strategy that you would advise on the top stock from Metals Pack, Vedanta?
See, Vedanta, first of all, is a good positional play, and do not try to trade in this particular counter because short term momentum is not there. The stock is consolidating in a very tight range of 440 to 480. So that's the range as of now for the Vedanta. But positionally, I believe once this consolidation gets over, gradually we can expect a momentum towards 520 to 550. So add in the portfolio from a positional perspective. From a trading point of view, I think if at all you see any tip towards 440, that can be a good entry point. But as of now, it is looking sideways to weave. Wait for a right entry that is somewhere around 440. That could be a good entry point. And keep a time horizon of 3 to 6 months. You'll get a decent return.
Okay, fair point. Taking the next one. This one is from one of our viewers who wants to know on a railway stock on IRFC. He already has the stock in his portfolio at 160, Nilesh. Should he hold or exit? And if any target that could be advised on this one as well.
See, from the lower levels, the stock is making an attempt to move on the upside. A gradual up move can be seen. Last time we saw 160 kind of level that was around 8 months back. So you need to give some more time. Gradually, we can expect those levels to once again retest. Maybe next 4 to 6 month kind of time frame, we can expect those kind of levels once again. But overall, the major structure is more sort of a sideways. The trend, there is no momentum as of now. But stay put with the trailing stop loss at 128. So that should be your stop loss. And gradually, we can expect this counter to move towards 160 to 165.
Fair point. Taking the next one, this one is from Ankur Modi. He says, Hi Sakshi, good afternoon. Hope you're doing well. Very well, Ankur. Thanks for writing in. Wants to know about two stocks, Nilesh. One is Genus Power and the other one is Anantraj from the real estate pack. How would you look at both these stocks from a long term perspective? And are there any investing levels that you could suggest on either of these stocks?
See, Anant Raj, this particular stock, first of all, we have seen a good run up earlier, and post then in last few months, in fact, last 4 to 5 months, we have seen a good consolidation. So this stock is as of now in an accumulation zone. From a positional perspective, it's a good bet to add in the portfolio because we have seen a good momentum over the years. Now it is giving a good opportunity to accumulate in the zone of 450 to 500. Keep a stop loss below 390, and positionally the stock may test the levels of 900 to 1000 as well from next 2 to 3 years perspective. Now coming to Genius Power, see this stock is also looking strong on the chart from a positional perspective. Good level at current price as well. It can be accumulated. Buy up till 300. Keep a stop loss at 270. And from a positional perspective, the stock may test the levels of 450 to 500 from short to medium term perspective.
Okay, fair point. I hope this has answered your question well. Let's take the next one. This one is also from our WhatsApp that we're getting some questions. We have Gul from Kerala writing in. Wants to know about Fortis Healthcare purchased at 654 rupees for 1 year. At what price can I add more, sir? Is the question. So, some more averaging is what our viewer Gul wants to do. So, she purchased at 654. The stock is in profits at 809 and wants to add more on the higher levels. That's a great thought process. Usually people think of averaging only on the prices below, but when you're confident of a stock going higher, there's also a good strategy that you can keep averaging on the way up as well. Let's find out whether Fortis is in the right category there. What about Fortis Healthcare, Nilesh?
Well, Sakshi, this particular counter has been in a very strong uptrend, looks very strong on the chart as well. So first of all, very good stock has been identified and added at a very good price as well at 650. So ideally, you should do pyramiding in this particular in this type of counters where the momentum is looking strong. So at any price, it can be bought. If at all you see any dip towards 750, 780, that could be a good entry point. But in a regular interval, it can be added in the portfolio. From a positional perspective, the stock has a very high possibility of moving towards 1100 to 1200. So I can assume that somebody wants to hold it for little long-term perspective from next 2 to 3 year point of view. I think the stock has a potential to deliver 20% CAGR as well. So good stock to hold in the portfolio. Keep a trading stop loss at 700 and can be bought on declines and can be added on breakouts as well.
Okay, fair point. I hope viewers, you have got the idea on this stock as well as Gul, you've got the strategy for your own portfolio as well. Before we go on to the next key questions, there's a very important news flow that we have to make you aware about. Remember, viewers, last week we had talked extensively about how Jane Street was in focus. SEBI had taken stern measures against Jane Street, calling their gains in the stock markets as unlawful and illegal. Even Jane Street's accounts with about 4,800 crore rupees were impounded by SEBI as well. And SEBI now, after this episode, is gearing up for more scrutiny and surveillance on weekly options expiries as well. SEBI chief Tuhin Kanta Pandey is talking about how a white paper could be released today, which will talk about a 3-month analysis of weekly expiry data and how market manipulation is done. Let's listen in to what SEBI chief has to say.
हम लोग सब लोग सेबी इकोसिस्टम में मिलके एक मैसिव इन्वेस्टर अवेयरनेस कैंपेन भी करेंगे जिसमें थीम बेस्ड फोकस होगा और उसके लिए भी तैयारी चल रही है। नहीं वो तो I've said yesterday also I've said that we are watching it as basically surveillance issue and obviously surveillance at both at the exchange level and SEBI level will continue and we will also upgrade those surveillance measures and I don't think there are very many other risks which you are posing.
कई सारी जो वीकली एक्सपायरी थी वो बंद कर दी, उनको मंथली में कर दी, लेकिन अभी भी कुछ है वीकली एक्सपायरी और बड़े तबके का मानना है कि वीकली एक्सपायरी में मैनिपुलेशन ज्यादा हो सकता है, तो क्या उस पर भी विचार किया जा सकता है आगे चल के?
कि उसके बारे में भी मैंने बोला है कि हम लोग वॉचफुल हैं और जैसे ही डेटा आगे वर्कआउट होगा डेटा को देखेंगे उसके हिसाब से हम आगे के निर्णय करेंगे। इस समय इस तरह की कोई मंशा नहीं है, लेकिन अभी शायद अब हमारा डेटा आज हम शायद वो डेटा भी निकालें जो हमारा 3 महीने का क्या रहा है, जो एनालिसिस हमने वाइट पेपर बोला था वो भी आज जारी करेंगे।
सर, और इस डेटा में इस तरह का भी डिफरेंशिएशन होगा कि वीकली एक्सपायरी में लोग कितना नुकसान कर रहे हैं और मंथली एक्सपायरी में कितना नुकसान कर रहे हैं और एज वाइज कितना नुकसान कर
नहीं, जिस तरह से आप देख लीजिएगा, व्हाइट पेपर को देख लीजिएगा, क्या 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 उसमें इंफॉर्मेशन मिलती है, उसमें कॉम्प्रिहेंसिवली इंफॉर्मेशन आपको मिलेगा।
All right. So that's SEBI Chairman Tuhin Kanta Pandey talking about how a white paper could be expected today from SEBI that could reveal data on the losses that investors may be incurring on weekly and monthly expiries, as well as age-wise trading patterns could also be revealed. And of course, weekly options expiries surveillance and scrutiny will also be extended to really see if there is any kind of market manipulation that's taking its surveillance has been increased after the Jane Street episode as well, and you clearly see an impact on the stock markets after this news flow has really come in. We are now trading at the low point of the day as well, so the choppiness that has increased at this point in time. Going back to Nilesh, this is very important that's coming in. Last one entire week it focused on how Jane Street, as the information came in from SEBI that despite warnings from SEBI onto Jane Street as to finding out how their modus operandi was, they had continued with their operations, and at the final end, SEBI has now impounded about 4,800 crore rupees of unlawful gains that SEBI has alleged that Jane Street has made in the Indian stock market, especially on expiry days, by taking opposite positions in cash and F&O markets. That's how SEBI believes that this was manipulative. Now, of course, there was so much of conversation that we had even with top market experts who said that holding opposite positions in cash and F&O is actually not illegal, but it was the sheer scale at which and the synchronized way at which Jane Street was operating that led, SEBI to believe that this is being taken in as a playground or a one-way street where such large hedge funds are making a lot of money, and they want to protect more and more retail investors from any kind of an impact that they should feel because of this. Finally, Tuhin Kanta Pandey is saying that they have been looking at studying any larger data on weekly and monthly expiries to find out if there are any kind of losses that are being incurred as well, and that could be expected today. What's your first thought here?
So Sakshi, first of all, this is a big crackdown the SEBI has done, and prompt action has already been taken. So that's a very good step from the SEBI, and they are taking it on a priority basis as well. So most of the retail people have also lost a lot of money during these last 2 years of manipulation. No doubt, holding positions is not illegal, but holding large position and manipulating the entire market is definitely needs to be looked at.
Absolutely.
And strict surveillance needs to be in place so that in future these kind of activities should not be repeated. So in order to protect the interest of the retail small investors who are trading in the options market, they have lost a lot of money in last 2 years. So that confidence needs to be brought back in term of a strict surveillance. So that is the need of the hour. I think the white paper what he's talking about that will give a clear picture. So we should wait for that.
Okay, absolutely. I think that will be the most important news update from SEBI today. All eyes will be on that white paper released, which will help us understand if there are, huge losses that are being incurred by retail investors at large, and to what extent have they been impacted on weekly and monthly expiries because of any kind of manipulations, if at all they have occurred in the recent past as well. And that will, of course, also point out to what the next steps during this, within keeping all of this in background, can SEBI take to curb any kind of manipulations going forward? So will there be stricter norms? Will there be an overhaul of the system? Will there be more increased surveillance? Because already SEBI has reduced the expiries to 2 days now, Tuesdays and Thursdays, from earlier that was on an everyday basis. So that has already been taken place. We'll have to see how things progress from here on. All right, we'll come back to our Q&A session now. We have some questions coming in from Shiva now. This is from Andhra Pradesh. Shiva wants to know on Motherson Sumi shares, is it the right time to buy? He asks you, Nilesh.
Looks good. I was looking for this stock only. The stock has given a good breakout today. From a trading perspective, from a short-term point of view, I think the stock is looking good for 160 to 165 kind of levels on the upside. So with the stop loss below 150, Motherson Sumi can be bought purely from a trading perspective, looking positive. But if at all it breaks the levels of 165 on the upside, then it will be considered as a multi-month breakout. Then probably we can expect the levels of 180 to 190 as well. But purely from a short-term perspective, looks positive. Stop loss should be at 150.
Fair point. Let's take another one then. This one is from one of our viewers. This is Arjun from Kollegal. He says, is it good to buy Manyavar for the short term? Okay, that's Vedant Fashions for you viewers. Manyavar, in the last 1 year or so, the stock has actually not performed, especially on a year-to-date basis. If you see, it's been a downward performance. 35% has been lost for investors there. I think the peak was of around 1400 back in the month of November 2024, and the stock has really not got a comeback after that point. Any suggestion for the short term on Vedant Fashions?
Well, Sakshi, you have rightly pointed out the stock has not performed in last one and a half year. In fact, we have seen a lot of underperformance. The bias is looking slightly on a negative side, but
Yeah.
in last couple of months, we have seen a good base formation, specifically from the month of March. We have seen stock taken a good support at 750, 700 zone. So there could be possibility of a pullback. So purely from a pullback perspective, one can buy this particular stock, keep a strict stop loss at 765, and this pullback may extend towards 865 to 900. We need a decisive breakout above 900 to call it as a short-term bottom formation, but purely just to play a pullback, a stop loss should be placed at 765.
Okay, fair point. Taking the next one. This one is from one of our other viewers on WhatsApp again. Sandeep Jain from Kishanganj in Bihar writes in. My question is on Apollo Micro. I have the stock at 195 in my portfolio. I need help. What exactly should my strategy be on Apollo Microsystems?
The strategy is to first of all hold this particular counter. We have seen a good momentum recently after hitting highs about 220. The stock is currently witnessing a profit taking, and this profit taking is not supported by the huge volumes. So volumes are dry. There could be possibility of a rebound from the lower levels near about 170 to 175. That's a very strong support for this particular stock. So first of all, keep a stop loss at 170. Stay put, and if you see any pullback towards 210, 220, that can be a good exit point.
Okay, got that already. The stock has really rallied quite a bit, and you have got the strategy there. The other question that he had was on FinPipe, that's Finolex Industries. He already has a stock in his portfolio at 220. Right now, the stock is at 206. Any suggestion on whether the stock can come back to his price?
From a short-term perspective, the counter is looking weak, and we can expect further downtick towards 200 to 195 as well. So purely from a trading perspective, if bought it from that point of view, then exit on pullback should be the strategy. If you see any pullback toward 215, 220, then exit from the long position because the stock is facing multiple resistances on the upside. If somebody wants to stay put, then keep a stop loss at 201. If it breaks those levels, then exit from the longs.
Okay, got that. I hope this has also helped you out. Next, let's take a question on Satyanarayan Rao Kulkarni writes in. He says, could you please suggest an outlook on chemical stocks and any stocks that you can probably suggest within the chemical basket at the current stage as well, Nilesh?
Right, so chemical basket, recently we have seen a good momentum across all chemical stocks. So couple of stocks that are on our radar as well. First of all, SRF. This particular counter has been in a very strong uptrend, making a head up and bottom formation. And in fact, it has hit a new record high as well in the previous week. So still looks strong for 3400, 3500 kind of levels on the upside with a stop loss below 3100. SRF can be added on declines. Apart from that, if you see Navin Fluorine, this particular stock is also looking strong on the chart. We can expect a gradual up move to extend further. It is also on the verge of a multi-year breakout as well. So in the year 2023, the stock made a high of 4,950. So currently it is trading exactly around those levels. So if it breaks decisively, then we can expect positional target of 5,300 to 5,500 as well. So Navin Fluorine is also looking positive. Stop loss can be placed below 4,800.
Okay, fair point. Taking the next one, this one is from Rahul Balve. He writes in on Equita Small Finance Bank. I already have the stock in my portfolio. My purchase level is 68. He says, could you please view this and let me know how is the stock and what kind of strategy should I adopt?
See, do not expect any major up move from a short-term perspective because the stock is in a downtrend, and we have seen a constant supply coming in near about 70 levels. So 70 is acting as a kind of a study wall, and it needs to break those levels for further momentum towards 75 to 80. But as of now, the stock structure is looking weak for 62 to 60 kind of levels on the lower side. So if bought it purely from a trading perspective, then you should keep a strict stop loss at 62.5 and any pullback towards 67, 69, use that pullback to exit.
Use that pullback to exit. I hope this has answered your question well. Taking the next one, then this one is from Sandhya. Sandhya says, "Sir, can you please suggest any intraday strategies for Vari Energies, and what is the target and stop loss that I should keep, and what is the exit price that I should have on Vari?"
See, Vari is not a stock which should be traded on intraday perspective. It is moving sideways as of now. But if you have already bought it, then keep a stop loss at 2900 because if it breaks those levels, then there are high possibility of testing 2800 levels on the lower side as well. But purely from a positional perspective, it's a good stock to hold in the portfolio. And on the upside, 3200, 3400 kind of levels can be seen from a short to medium term perspective. But purely from intraday point of view, the range is 2900 to 3100.
Okay, got that. I hope you've really understood why you should not be looking at it for an intraday perspective, and both a strategy that has been recommended to you as well. Next, we have this question from one of our viewers, and Vineet Kulkarni wants to know, Sir, Praj Industries or Godavari Bio, which one is good for the absolute long term, 10, 20 years odd or so? Extremely long term view, Vineet, but let's try to find out at least for the medium term, what is the strategy? Very difficult to say something about 10, 20 years, but Godavari Bio or Praj Industries, which one would you bet big on?
Godavari biorefineries, I think this particular stock is talking about. So Godavari Biofinance is not looking attractive. The stock has a history of hitting multiple lowers and upper circuits, so it's highly liquid counter. Avoid first of all Godavari Biorefinery. It is not looking that attractive. Apart from that, Praj Industries, see purely from a trading perspective, short to medium term perspective, the stock can be bought keeping a stop loss below 440. Not from positional perspective, but yes, short to medium term perspective, since the stock has given a good correction, it is at multi-month lowest level. So from a risk and reward perspective, looks good. Keep a stop loss at 440, and on the upside, 600, 650 kind of levels one can expect from in this particular stock from 6 to 8 months or maybe 1 year kind of time frame.
Okay, fair point. All right, Nilesh, we'll thank you then for being with us on the program and helping us and our viewers with all their queries and solving them. Thank you so much. Appreciate your time with us on the program. Viewers, now we'll get into the second segment.